What a day. Lots of news. 3-1 advancing to declining stocks, and we're getting awful close to that old high on the S&P 500. But look what's leading. Chinese stocks are leading. Just look at some of these ETFs around China, like KBA. That's the mainland China ETF, up 2.25 points. Banks also leading. That makes sense. Energy leading on the Anadarko deal as well. Semiconductor, the old leadership group. Everything you want leading is leading today. China data. Tremendous. And that's the reason the global markets moved up around 4 o'clock Eastern time, a.m. We got data from them. Bank lending was much higher than anticipated. That stimulus is working a little bit. Exports were up 14%. Markets moved up. All this happened after the close over in China. Bank earnings, they were better than expected. The numbers generally, particularly J.P. Morgan, were generally better than expected. So all those stocks are trading up, including PNC, big regional. The Regions Financial, Huntington Bank shares, all up about 2% as well. But it's the comments from Jamie Dimon that really helped propel a sort of second rally early in the pre-open, because he hit on all of the points the bulls have been arguing. Here's the key comment here from him. Even amid some global geopolitical uncertainty, the U.S. economy continues to grow. Employment and wages are up. Inflation is moderate. Financial markets are healthy. And consumer and business confidence remains strong. This is a perfectly crafted statement. Hits on all the points the bulls. Global economy a little uncertain, U.S. economy strong, inflation tame, all of the right points, and it supports the bull thesis, which is why we have been rallying all year, that the U.S. economy is strong, that China is bottoming, Europe is a bit uncertain, but hopefully they'll find some bottom in the third quarter. There is no imminent recession. We are seeing flattish earnings, but no earnings recession, and you can see this when the numbers have been coming in recently. There have been several companies reported before Before J.P. Morgan reported, 25 companies yesterday, there's 29 companies today, and they beat by 7.5 percentage points. That's way above what they normally beat by 3 percentage points. The reason that's happening, they cut the numbers too much in December. Now they're realizing that they cut too far, and the numbers are going to probably end up in positive territory. So right now, remember, first quarter numbers are down about 2.5%. That number is probably going to go positive if the trend that we are seeing continues overall. Finally, just a quick note here on some of the other things. Notice the exploration production names that are out there. I mean, yes, you see Anadarko moving, but look at Apache, Devon, Pioneer Natural, Concho, Noble, all of them up 4, 5, 6%. Obviously, E&P names, particularly Permian names, are a big part of today's move on the upside on energy stocks. Finally, I just want to note, 2930, remember that was the old S&P 500 high. We use closing highs, not intraday as much down here. So we're talking 20 points away from that historic high, and breaking through that, obviously, a big deal.